Australian dream of owning your own home is slipping further away as thousands of homeowners grapple with the biggest interest rate hikes in 2 decades.
So, is there any relief in sight for mortgage holders? And what about the market? To discuss this, we're joined by Mark Bouris, who's the Executive Chairman of Yellow Brick Road Home Loans.
Good morning.
G'day, Mark. We're seeing prices come off 5% in New Zealand already. Is that something we're likely to see here?
I expect so, and actually all the commentators are saying exactly that. And when you say 5%, that's across New Zealand. But if you look at Auckland, Auckland's prices have come off 10% in the last, well, since November.
Yeah. So
Auckland actually had a greater price rise than anywhere else in New Zealand as well. Bear in mind, Auckland's prices, or New Zealand's prices, went up 45% over that 2020 to 2021 period.
Wow. Aussies, meantime, are fleeing their home states in record numbers. We were discussing this yesterday. A lot of people moving from the big capital cities, Sydney and Melbourne, and moving to places like WA and Queensland. Should we expect price rises in those states? Well,
we actually are seeing not so much price rises, but zero vacancy rates for renters. So people aren't just going and buying a place straight away. They're going, having a look around, southeast Queensland, like Gold Coast, etc., all have zero vacancy rates, as well as Brisbane as well. So what it's saying to me is that if you're an investor and you're looking to make sure that you get a tenant, then one of the places you should consider buying right now is a place like Queensland, Brisbane in particular, or southeast Queensland.
Interesting.
Yeah, and rents are going up, which can sort of make up for the interest rates for investors, different for homeowners, of course. And what about regional markets? We've seen places like Wagga go up 18%. Are they going to soften up like the city markets as well, do you think?
Well, property prices are a function of a couple of things. One, it's a function of population growth, it's a function of scarcity, and it's a function of time. Places like Wagga, Ballina, Lismore, lots of places around Australia, regional areas, have had a net migration towards them. So migration into regional areas across Australia went up 16% last year, and in the last quarter alone of this year, they've gone up another 9%. So that's telling us there's a lifestyle change, population growth, so I would expect regional areas to fare better than metropolitan areas when it comes to the price changes as a result of these interest rate rises.
Yeah, so where's it all headed? Do you think that first home buyers should hold out a little longer? Is there still room for it to dip?
Yeah, the timing question.
Well, I always say if you've got a loan approved and if you've got the deposit, then go and buy the property if you fall in love with something. If it's available, go buy it. But equally, I would also say if you're looking for a bargain, then now is not the time to seek the bargain. I mean, sure, search different places, but I think the bargains are going to come out towards the end of this calendar year, around Christmas time, January and February, when we're probably going to see another 3 rate rises between here and that date.
Wow, OK.
So what's your advice to mortgage holders staring down the barrel of that prediction?
Don't panic, and just go back and review your budget. Make sure that you're in a position to reduce discretionary spending where you can. Whatever you do, don't panic and sell your property. Don't panic and go into default, and just peel back your cost of living wherever you can. And it's about just grinding down onto the position right now where you're at in terms of your spending and your earning, and make sure you are well aware of what you're doing with your dough.
The cost of living's going up, so it's a very tricky balance right now, isn't it?
But don't panic.
OK.
Mark, always good to have you in to bring some calm to the desk. Thank you. We'll see you next week.